Graham Attley, who is the International Tax Director at PwC and Treasurer of the ICBA, is here to break down Budget 2024 and talk a little bit about what it means for the membership of the Ireland-Canada Business Association. Graham, you're very welcome. How are you?
Thanks, Patrick. I'm very good.
Can we start maybe with just a general backdrop of Budget 2024? A little bit of the context.
Sure, absolutely. Yeah, I think the context is that this was Minister McGrath's first budget speech, and some parts of the media were billing it as a pre-election budget, albeit the coalition intend that there will be one more budget prior to the next election, which is due to be held in February 2025. So the backdrop is global uncertainty, high inflation, lower growth expectations for Ireland, but the economy is still in a pretty good place. Over 2.6 million people are at work, which is regarded as full employment. So while there's money in the pot for the minister to play with, there is a concern that a significant element of our corporation tax receipts are regarded as windfall receipts by the department, and they may not be there in the long term, so shouldn't be used to fund current expenditures. So with that in mind, the most strategic element of yesterday's announcements was the introduction of two new investment funds, the Future Ireland Fund and the Infrastructure, Climate and Nature Fund. So in theory, these are innovative proposals that will allow for a long-term investment in key areas. So it'll be interesting to see further detail on these in due course when they're available.
Okay, well, let's look at the corporate tax measures. What happened there?
Yeah, on the corporate tax side, the minister noted that legislation will be published in next week's finance bill to introduce the 15% minimum effective tax rate for large multinationals. So this is part of a 10-year global project led by the OECD with the aim of reforming the taxation of large multinational enterprises. And the whole thing is known as Pillar 2. So that'll be, he announced confirmation that's going to come in from 1 Jan 2024. And next week, we'll get the full details on it. And important to note that the 12.5% rate will still remain for all other companies, all normal trading companies. There was also very welcome news that the R&D tax credit will increase from 25% to 30%. So this is a credit that applies to qualifying R&D activities that are carried out in Ireland. So in essence, they think this will maintain the net value of the credit for those companies that are within the Pillar 2 15% bracket. But it will be a real increase for those companies who aren't within the remit of Pillar 2. So the 25 to 3%, that'll be obviously a 5% increase on their research and development spend. And finally, on the corporate side, the minister also referred to the recent announcement he made that he's bringing in a participation exemption for foreign source dividends, and that'll come in from 2025. So next year's finance bill will have the full details on that. But again, that's something companies have been asking for, and it's a welcome announcement.
Okay, well, look, obviously one of the big talking points and one of the big pressure points, I think, for business and employees alike is the property crisis, the housing crisis. What did we learn about what the government intend to do about this in the budget?
Yeah, there are a few things on this, and I'll give you a couple of them. So first off, there's a tax break for those with mortgages. So in light of the rising interest rates, the minister introduced a 1-year tax break for homeowners who have a mortgage balance between 80,000 and 500,000. So the ways the relief is introduced is that you look at your interest paid in 2022, compare that to your interest paid in 2023, and you get a 20% relief for the increase in the interest payable between the 2 years. And there's up to a maximum of 1,250 benefit. For renters, the rent tax credit has been increased from 500 is the existing one up to 750 from 2024. And he's added a bit to that as well. The eligibility is extended to parents paying for their student children in either rent a room or digs accommodation. And then thirdly, there's a temporary tax relief for landlords. So this will result in a certain amount of rental income being disregarded at the standard rate of tax. So it's a 4-year regime and would give a tax benefit to landlords of €600 next year, €800 in 2025, and €1,000 in both 26 and 27. So there's a key condition of this relief is that the property must remain in the rental market for 4 years, otherwise the relief is clawed back.
Okay, interesting. Any other income tax measures?
Yeah, quite a bit of income tax measures. Again, a number of small measures. The total income tax measures actually are valued at 1.3 billion. So one of the main things for general workers is the widening of the standard rate band, the 20% band. That's widened from 40,000 to 42,000. There's also been, for the first time in a number of years, a USC cut. So the main rate has gone from 4.5% down to 4%, and the entry point is increased. So you need more salary to even get into it. And also then there's been €100 increases in a number of tax credits, including the personal tax credit, the employee tax credit, the earned income tax credit. There's a number of them. So overall, it's estimated that the tax benefit for a middle income earner, which I think the budget has been aimed at middle income earners, I think the overall tax benefit is about €850 per year just on income tax reliefs. There is one area where it's going the other way, where there's a small tax increase, and that's on PRSI. It was flagged that there's going to be just a 0.1% increase in all contribution rates on PRSI, but that won't come in until next year, so October 2024. And the idea of that is to address the aging population, pension fund concerns, that type of thing.
Okay. Any other areas of interest that you'd like to note?
Yeah, so it was a very wide-ranging budget. So there was measures across a whole spectrum of areas. So just picked a couple just to finish up on. The temporary lower VAT rate of 9% that applies to electricity and gas has been extended for another year. It was expected that was going to go back to 13.5%. So that 4.5% reduction has been pushed out for another year. There's a 75-cent increase on a packet of 20 cigarettes. So the minister said that brings the price of cigarettes now up to $16.75. And the minister also flagged that there will be a new domestic tax on e-cigarettes and vaping products, but he'll bring that in next year's budget, not this year. And lastly, there's no increase in alcohol duty, so the price of a pint is unchanged.
Okay, finally, how has it been received? What's the overall conclusion about this budget 2024?
Yeah, it's probably mixed overall, but because there's a little bit in it for everyone, but no huge gains. Like the government did have to balance the measures taken to tackle cost of living relief with measures that build economic resilience over the long term and taking care not to stoke inflation. So yeah, no big winners. I think there was something for businesses though. There was something for workers, something for families, little something for social welfare recipients, for house owners, for renters, for landlords. So it's kind of similar to the last couple of years, to be honest. There's a little bit of something for everyone.
Graham Attley, International Tax Director at PwC and Treasurer of the Ireland Canada Business Association. Thanks very much for breaking that down for us.
Thanks very much, Patrick.